Because you know what? We are live. Good morning. It's Friday, September 4th, 2020. September 4th. The year's almost over. And I'm sure we're glad for that, the way this year has gone. I don't think
Hey, what's happening? What's been happening this year?
What?
What's been happening this year? I haven't noticed anything different.
No, yeah, it's all perfectly normal. Perfectly normal. Murder hornets and all. All right. So today we're talking about, it's really a bit of a carve out from last week's webinar where I was talking about cash flow, pandemic cash flow strategies, as I called them. And so I'm taking like a piece of what we talked about last week and going to dive a little bit deeper on it. So some of it you're going to recognize as a bit of overlap. And I don't know about you, but I need to hear things many times before they really sink in. So I don't mind repeating myself a little bit this week, but then I'm going to show you by the end of this a template that I actually use for myself daily. And of course, I'll make the template available on the website when the recording of today's session is posted. So we're talking about simple cash flow or simple cash position analysis, right? And it's something I've been going over with people in the Bulletproof CFO program, because a lot of what we're doing there in terms of providing advisory services and strategic analysis is looking at, what we can do. First, we should be doing it for ourselves, right? We should certainly drink our own Kool-Aid, but then of course, what we can do and how we can do it for our clients. And so we're going to start with analyzing cash flow, right? We look at building cash flow forecasts, or projections for these clients. And in some circles, they might even be referred to as a financial model, right? But that term, I think, scares some people. They think that's reserved for like Harvard MBAs. It's not. It's not that complicated, I promise you. But we're starting with analyzing cash flow. And I know it's simple, and it's something that it's so simple that we all agree it's something we should do, and yet so few people actually do it, right? And we talked a little bit about that last week, that, a lot of these obvious things, when I say something and you say, well, tell me something I don't know, but then the follow-up question to that is, okay, so what are you doing because it's so obvious and you know it? How are you actually applying it? And that's usually about when I get that deer in the headlights look. Well, I know I should be, but I'm not, right? And so this week, we're going to get down to something very specific and practical along these lines. Excuse me. Let me just move some things around on my screen so I can get things better organized here. And hopefully not choke. So last week I mentioned, that I can look at a balance sheet and it may have zero impact. Why? Because I've run 1,000 balance sheets on 1,000 companies. And when I do that now, I'm going through the motions, but my mind can be 1,000 miles away and not paying any attention to what I'm looking at on that balance sheet. And the same is true for my clients. So I need a process that brings me into the moment, one that forces me to pay attention. I need something I can do and look at consistently on that basis. And a balance sheet, just looking at a balance sheet for the reason I just explained, generally doesn't do it. It might do it for a short period of time, but it's not sort of sustainable. I just get too used to going through the motions of looking at a balance sheet and saying, oh, okay, good. Accounts are reconciled, looks accurate. And then I move on and I don't even give it another moment's thought, right? And the thing that's helped me the most over the years was a much simpler, but first of all, let me back up. The other thing that I haven't found in a practical sense is really as helpful as I think we'd all like to think it is, are the fancy KPI dashboards that we're all kind of like reaching for. All these tools that we use that we want to spend $100 or $500 a month or whatever it's going to be. I haven't actually found them to be that helpful. Again, they look pretty and they're nice. And if I do take the time to go through the analysis with the client and understand what it's really saying, then then they can be useful for sure. Don't get me wrong. But for the most part, I find that clients look at those KPI dashboards and just, again, looks pretty, looks nice, and then we just kind of move on and get back into whatever it was we were doing a moment before, right? So again, it doesn't command our attention as much as it really needs to. And so the thing that's helped me the most over the years was something that's much simpler than all these fancy apps that we're used to talking about and propose to use. And I need a number, right? And I mentioned this last week, and I remember seeing in the chat, a lot of people, sort of reacting to this. is a much simpler number, something that I can look at, and I want to get to the answer to a simple question that we talked about last week, which is how much do I need to be okay, right? What amount of money do I need to have and maintain in the bank to be okay? And I'm talking about working capital. I'm talking about, I'm talking about a number or a range really, where I know that when my cash balance sits in this range, payroll is going to be covered. All the working capital needs, everything I need is going to be covered as long as the cash balance stays pretty much in that range. And then we're going to need to look at another number, which I'll mention kind of briefly further down in this, that helps us kind of project if that number is going to stay okay, so to speak. And I'll clarify that, a little later on. But I need a number. How much do I need to be okay? And you won't know the answer to this question until you had a consistent, recurring, and regular look at your daily cash balance. So what I've gotten in the habit of doing is that I start off just about every day by looking at my balances and analyzing how much of that cash is truly mine. And when you do this consistently for a few months, you'll start to get a sense of what you need and then how much is enough to start transferring money into savings, to say, okay, I've gone over the threshold of where I need it to be, so I can move that difference over and know that I can move it and keep it there. It's free and clear. The expenses are still met. What we don't want to do is create a habit of moving money out and then having to pull it back in. Because as soon as we do that, as soon as we cross that line, we're just going to keep doing that. And then there's going to be no sort of boundary and that savings won't build, right? Trust me, I've experienced this over and over and over again. And it took me forever to finally get the discipline. And what I'm explaining to you today is essentially how I got the discipline down finally. So I like to start off every day looking at these balances and analyzing how much of my cash is truly mine. And like I said, when I do this consistently for a few months, I start to get a sense of what I need and then how much I can transfer. So let's say you figure out that maintaining a balance between 20 and 30,000 is it. Okay. As long as I have that much in the bank, my payroll, my operating expenses, everything I need is easily covered, right? And I stress the word easily. It shouldn't be a stretch. Okay. So that's perfect. Now the question is we analyze the timing as we look at the balance, right? So if your payroll, which is usually your biggest expense, has just come out and the balance is still at 30K, the high end of that range, and here's the other number I alluded to, and your net 30-day sales number is also at its mid to high range, then you should transfer 10,000 out. Because with your net sales number, which is kind of the forecast of what's going to happen to your cash balance near term, as long as that is in its own mid to high end of the range, then, and I'm at 40K or I'm at 30K, let's say, and I know payroll's just come out. So my biggest expense has just come out and I'm still at the high end of the cash range and my net 30-day sales number is where it needs to be. I can safely move 10,000 out of my operating funds into my savings and know that I won't have to reach for that again because that net sales number is telling me that money's going to keep flowing in and that balance should replenish plentifully between now and the next payroll. Those are some of the keys. So you want to look at those parameters when you're analyzing your cash balance, right? Now, if your balance breaks through 30K, let's say to 40K, then generally speaking, you can transfer anything over that 30K mark, the upper end of that range, whenever it gets there, but especially if it's right after payroll came out, right? And once you have this system in place, then you can focus on the most important thing, which we also talked about last week, which is sales, right? Remember, sales solve most problems. And since you're running a service-based business, most of you who are sitting here with us today, I'm assuming, then you probably have little to no overhead, right? Maybe not no overhead, but you probably have relatively little overhead compared to, let's say, a product-based business. Point being, I know that making a profit once you have the sales probably won't be all that difficult, right? So, because Matthew mentioned last week about making sure you have quote unquote profitable sales. So it was a good point. And I want to sort of stress that clearly that, that there's an assumption here that it's easy enough to make sales profitable, but even if it isn't, the first step is get the money coming in. Then let's figure out the rest, right? Cash flow. Right? I need the money coming in. I can figure out the profitability afterwards. Hopefully that's my biggest problem is figuring out how to deal with the cash inflows and make sure that it gets and remains profitable, right? So again, since most of you are running service-based businesses, I'm assuming that's not going to be very difficult to sort out. And this has really helped me at times when I was struggling, but also when I was really flush. Because one of the traps we fall into is when we're flush, when there's plenty of money coming in, we don't worry about it. And so we don't pay that much attention to it. And so that we don't realize how much of it we're actually squandering and spending unnecessarily in many cases, because it's easy, right? So it's important. It's, in fact, I would argue it's almost more important when things are flush to analyze this stuff very closely and to make it one of our primary focuses, you know. And again, the two main numbers are going to be your cash position, how much money you have in the bank, and your net 30-day sales number, because that's the biggest indicator of whether or not the cash is going to be sustainable, if you know what I mean, right? So I love that 30-day sales number. And that I kind of learned by accident, because when I moved my website over to Kajabi, and then as time went on, I processed more and more of my revenues through Kajabi. Almost all of it goes through there now. There's some stuff that I do through QuickBooks payments that's not factored into the number, and a few other sources, but most of the money that goes through my business now is processed through Kajabi. So Kajabi has it tracked, and the first thing it shows me when I log in is my net 30-day sales. So it's my average sales number for the 30 days. And that also becomes a range I can analyze. I've noticed, you know, so when it starts dipping, that's when I kind of say, oh, wow, I want to try and do something to stimulate sales, to maybe, to promote something that I offer, to get some new clients in the door, right? It helps motivate me and keep me focused on that, because again, sales are the most important thing. So, and when it goes up, of course, then there's a decision to be made: rest on my laurels and wait for it to dip again to get motivated, or better still, actually pay attention and say, well, how can I break through? If I know that my net sales number typically is within a certain $10,000 range, then the goal should be how to get it to break through the upper end of that range and keep it there, which again gets me focused back on sales, right? So if I can focus very heavily on the cash position and the sales, most other problems will take care of themselves. I can almost guarantee it, right? So like I said, this analysis that I'm going to show you has really helped me, both in good times and in poor times, let's just call it, right? Now, another important question: how much of your cash is really yours, right? It's important to have this reality check. So in other words, after I go in and add up my bank balances, first I want to factor in deposits in transit, right? Things like Stripe money that hasn't come in yet, that will come in the next day or two, PayPal. And by the way, you never want to keep money in PayPal. It isn't insured like it is in a bank account. So you really want to sweep that money out of PayPal and into your bank account. You know, there was a time when I left like $100 in the PayPal account to cover some of the little recurring charges that I had set up to be paid out of PayPal. And I just wanted to avoid having that money get pulled back out of my bank account, because on the accounting side, that just gets annoying, because now you have an expense that's paid out of PayPal, and if there was a little bit of money in PayPal, then part of it comes out of my bank, and it's just messy. So that's my own OCD stuff. But bottom line, you want to keep very little, if any, money in PayPal, again, because it's not insured. They are not truly a bank account. They're a payment processor that has infrastructure that allows you to carry a balance like a bank account. Now, so we look at the bank balances, we look at the deposits in transit that we know are going to come in. We know there's very little chance of that money not coming in. You know, it's already in transit. And we add that up. And now we want to subtract what we owe, right? So especially at a time like now, if you got an EIDL loan and you got a PPP loan, and you haven't, let's say you've, obviously the assumption here is that you did legitimately, get those loans and pay payroll, and you didn't fire anybody, and you have all your full-time equivalents. But let's say that as it happened, you had enough cash flow that you really in effect still have that much money sitting in your bank accounts. This is what I'm getting at, is we want to sort of remove that from the equation in terms of how much cash we have on hand, because let's assume, for the sake of argument for right now, that we're not going to get the PPP money forgiven, and the EIDL is, the forgiveness isn't even a factor. It's going to be paid off starting in about a year from now, right? So either way, if I have that money sitting in my accounts, I want to kind of carve it out and see how much of my cash in the bank is truly my own. Now, if you actually needed it because you wouldn't have had enough money to pay payroll, different story, right? But I think some of us, maybe even a lot of us, got that money as a safety net because we wanted to make sure, and some of us have needed it. Some of us may actually have ended up doing okay in terms of maintaining the business. I don't know that many accountants who have struggled a lot. I think so many people have needed us now more than ever that a lot of us have actually done well at this time. So again, this assumes that you did legitimately pay payroll in the weeks after getting the money and so on. And of course, we expect the PPP money to be forgiven, but you never assume that until you know for sure that that's what's going to happen. And that way, if you've managed your cash flow in such a way that you actually still have, that money and then some sitting in your accounts, when the day comes that the PPP money is forgiven, you can just transfer that amount out of your operating funds and into savings, because in theory, it's extra money that you don't need to have necessarily, again, assuming as long as you've got payroll covered, right?
Taxes.
I'm sorry?
You probably want to make sure that you pull a little extra aside for taxes, because the expenses that you paid with the PPP money are now non-deductible.
Got it. Great. And tomorrow there'll probably be more rules that we'll have to understand about this. So bottom line, make sure you have money set aside. And when you do, and when it's sort of free and clear. In other words, if they come back and, hopefully they'll say, hey, anything under 150K is forgiven. Great. We'll definitely be able to move that money aside if in fact we haven't, just raw cash flow wise, haven't actually needed the money, right? In other words, we've had enough coming in anyway. Also, we want to subtract credit card balances from the equation, right? Anything we owe on credit cards, we want to kind of deduct from cash in the bank, because again, that represents money that isn't truly our own. It's money that we've already spent. We've got to pay those credit cards down. And what I really want is a reality check on what's my real cash position. What out of the money that's in my accounts is truly my own, right? And I understand that for some, this might be sort of a discouraging perspective, but I think it's important to have that perspective, because then it gives you the reality check on what your trajectory needs to be in terms of where you are now and where you want to get to, let's say in a year from now, right? So add it all up, and then you have what's truly yours in cash on hand. And next we want to set a goal, right? So how much cash do you want to have set aside in savings? It goes back to that question from earlier. How much do you need to be okay, not just in your operating funds, but outside of that, in a more long-term kind of savings accounts. Now, one of the bank accounts that we're checking every day and adding up at the top of the analysis should be that savings or money market account, the account that we want to transfer money to when we get into the upper end of the range that we've identified, right? And now we want to summarize the net cash on hand in total and the net cash on hand as it exists only in the operating account. It's important to see both numbers. The operating cash, of course, is the number that you want to understand in order to make the decision about when to move the money to savings. And then we need that goal. So how much money do you want to set aside as a first milestone, right? Let's say it's 100,000. That's a good first milestone, especially if you're nowhere near that today, right? So then your goal of 100,000 gets compared with two numbers. It's difference from the net cash on hand, which includes everything, and then it's difference from just the savings, because that's the true measure of what you've managed to set aside and how close you are to having that goal set aside in the bank, free and clear of expenses, right? So, and that helps kind of motivate me to want to transfer more money into the savings, of course, when and if cash flow allows for that, right? So both numbers are good to see, but the one that really counts is the savings in the end. And that's the amount of money that you have, like I said, free and clear. And since you're managing all of this with the intelligence of, what needs to remain in the operating account, as I said earlier, there should never be a need to transfer money out of the savings. In other words, what happens in savings stays in savings, right? Now, what paying a lot of attention to this will do for you, what it's done for me, is that this process will give you tremendous peace of mind. It has for me. It may sound like a lot the way I've gone through it here, but as you're going to see when I walk you through this template, it's actually very easy to update every day, and it will only take a few minutes. And you should certainly start doing this for yourself, and then get in the habit of working with your clients. Of course, it should be your clients that are filling this out for themselves, and you might review it with them weekly or monthly or whatever it is that you have arranged with them, and especially if you're looking at providing advisory services, well, I think it's fair to say that inherent in any advisory services you're going to provide, it needs to include some kind of, at a minimum, monthly meeting with the client. Of course, you should be charging accordingly, where you review this kind of stuff with them. So first you get them in the habit of filling out this analysis on a daily basis, and then you can kind of have them pull it up during your meeting with them and review it together with them. And like I've often said, you know, the most powerful solutions are usually the simplest. So here's the template. Like I said, it's very simply. Before I dive in, though, any questions or comments based on anything I've said so far? I will take the silence and the lack of unmuting happening to mean that we're all good. Okay. So you'll notice here I've got a little last updated column here. That lets me know, well, pretty straightforward. When was the last time I updated this, right? Of course, here's where you have just the bank accounts, right? And I have examples here, Wells Fargo and Capital One. Capital One is the savings, right? So maybe we'll want to put something like, you know, to indicate that this is the money market and this is the operating fund. Obviously, you add in as many accounts as you need to have here on this. And hang on, I see the chat lighting up here, and now I can't find it as usual.
Tina says, what I heard sounds great. I'm multitasking and helping Sammy with her schoolwork.
Okay, there it is. And now I finally found the chat. Let me just minimize some things so I can see. And also, just let's check in quickly on the Facebook feed here. So far, it looks like I got nothing, but we do have some live viewers. That's exciting. Okay, so most of this is pretty straightforward, and as you can see, I've kind of, you know, I build my templates this way frequently. I've color-coded the things that require entry, right? So let's say I go into my Wells Fargo account and there's 30,000 in there, right? And then let's say my savings, I've started off with 10,000, right? So this tells me my total in all bank accounts is 40,000. And let's say I check my PayPal account this morning and there's like 1,500 in there, and I have 2 Stripe accounts. So you're seeing I basically carved out my actual template and just, you know, gutted it out for you so that, you know, obviously when you get a copy of this, you'll tweak it and update it however you need. I have 2 Stripe accounts. So the old account has much less activity. The new Stripe account is from when I set up my new website through Kajabi. So let's say I have another, I don't know, I'll just call it $1,000 coming in from here, right? So this is, again, nothing, especially for this group, nothing earth-shattering, not rocket science. We all understand having money in the bank and deposits in transit and adding that all up. The key here, though, is, like I said earlier, the sort of psychology of taking the time to go through the motions of looking up these balances and keying them into a spreadsheet. It forces me to actively pay attention to what I'm doing and look at it here. I know that any of you could easily just update your bank feeds and run the balance sheet, but it's not the same thing. And the balance sheet isn't going to give you this exact look at things, right? Over here, I've got the section for the loan money, right? And just, you know, for my own memory, I put this information here, right? 3.75% for 30 years starting in 2021, and the PPP most likely will be forgiven. So let's just say we got an EIDL loan, and I'm not talking about the grant, I'm talking about the loan. The grant is already yours free and clear, right? So we don't need to subtract that out. We're never gonna have to pay that back. So the EIDL money, let's say we got a loan of, I'm just gonna use, you know, random numbers here, 10,000, and let's say for the PPP loan, this I think has typically been higher for people. So let's make that 20,000 and let's make the PPP 10. Okay. And then what I did when I started doing this a while back, I sort of consolidated things. So I maintain exactly 1 credit card. And by the way, I pay the balance off entirely every single week. I primarily use the credit card to get rewards. I get cash back on this, which is free money. And by paying it down every week, it keeps my credit score up, right? I've noticed that because I get my Credit Karma report every month. And I've noticed, I started to notice that if I let the balance accumulate too much, and it happened to be at the end of the cycle where they pull the reporting, my score would take a dip. So I'm like, okay, I just need to make sure I pay it off in full every week, and then I'm covered. So we'd put this in here, and let's say it's let's say I have $5,000, as a balance, which I'm going to pay off immediately. Well, first of all, right here now, notice this kind of lets me know I can't pay it off because this puts me in a net negative position, assuming I'm planning on reserving out of the operating funds this 30K, right? So let's make it a little nicer picture just for the sake of illustration today. Let's say I only owe 2,000 on here. So my net cash on hand here, this is calculated, of course, is 10,500. Net in Wells Fargo, which is the operating account, is only 500, right? Because the idea is I don't want to touch this money. This money is not, it's untouchable. But I want to see the whole picture. I want to see everything. I want to see what do I really have in total, but what do I really have to work with? That's this amount here. So my net here is only $500. And if I put in my goal, we set 100,000. Now this shows me, okay, the difference from the total net cash on hand is 89,500. The difference from the money market is 90,000, right? Because I've got 10,000 in there. Now, again, it's not in this analysis, but the other number I mentioned that's important to take a look at is that net 30-day sales number. Now that I have this kind of picture in place, now I can get focused on sales. And let's say I do that. And in my experience, the more I focus on something, the more I pay attention to something, the better it does, right? So if I'm focused daily on what's my net sales number for the last 30 days, like I said earlier, that has a way of motivating me. Sometimes very much to where, and those of you who get my weekly emails, you wouldn't necessarily notice it, but if now that I'm mentioning it, you might notice, like if I push a little harder with some of the links to sign up for some of my programs, it's probably because I'm watching that number dip a little bit, right? That's typically what happens. I don't mind being very transparent about this stuff because that's what it does. And I might even throw in a coupon code, and an extra discount to encourage more people to sign up for something because I want to stimulate that sales number. I want to get it I want to get that average 30-day sales number to increase, right? Or I'll just, there's any number of different things I can do. I can build other campaigns. I might start doing video content on a certain program to help, anything I can do. There's a lot of things I can pull off the shelf or pull out of my toolbox, so to speak, because I've been doing this for so long that I can think of as different ways of trying to stimulate sales, right? Because then what happens that's really nice about this is, let's say now this number, starts to increase because I've done well. So let's say my operating fund now accrues to $50,000 because I've just brought money in and my expenses are pretty consistent. I know what those are. And like I said, I've established that, let's say between 20 and 30,000, everything looks okay. So now I look at this and, whatever these numbers are, these, again, you're going to update this. I don't necessarily do it every day, but just about every other day at a minimum, I'll go in and look at this. When I'm more worried, which these days, for better or worse, I'm not as worried as I have been at times in the past. But when I'm more worried, I'll do this more frequently. That's what that really comes down to. But, either way, every time I update it, I update these numbers to see what's truly cash on hand. This isn't going to change much until we start paying this loan off and until we determine that this has been forgiven. And, let's say this is now only $1,000, right? And so now look how much nicer things look. My net in Wells Fargo is 21.5. I'm still at the lower end of the range if my range is between 20 and 30,000. So I'm not ready to transfer anything just yet. But it's nice to see that I'm getting closer to that point, right? And this helps motivate me. It also helps prevent me from resting on my laurels, so to speak, right? Because what happens when things start getting good and flush is we tend to rest on our laurels. We tend to get complacent and say, okay, well, I'm good, right? I don't want to say, well, I'm good. What I want to do is I want to keep working on that net sales number, which is going to ultimately feed this number. And I want to keep working on this number so that eventually, sooner rather than later, hopefully, I can make my next transfer. And really what I try to do is carve out about 10,000 at a clip out of the operating account and into the money market. So let's say I determine that the cash position I'm in now is enough. Maybe I really only need 10,000 because payroll's just come out. So when I'm doing this, by the way, I also have my bank account online open so I can see what's come out, what's really included in this number. And the main thing I'm looking for is, has payroll just come out? Or sometimes I'll look and the net pay has come out, but the taxes haven't come out yet. So I want to be aware of that as I'm doing this analysis. So assuming everything's come out and I'm here and I know I'm okay, maybe my net sales number just went up a lot, whatever the reason, you know, as soon as I can, I want to carve out 10,000. So that'll knock this down to 40 and bring this up to 20. And of course, everything's just going to calculate from there. So now I'm closer to my permanent goal here, right? The difference from total net cash on hand, you know, doesn't change when I make that movement because I'm just moving assets around my balance sheet, so to speak, right? So the grand total doesn't change, but ultimately what I want to keep doing is growing this number and then carving out chunks over into this money market account. And I know it probably sounds and looks very simple, maybe even overly simple, but I promise you, this is one of those things where, you know, the simplest things are the most powerful and they just work, right? Because you know, what I don't want to do is get bogged down in complexities. I want a nice, simple process that I can follow, that I can do without spending too much time. And as you can see, once this is set up, you know, and what I recommend doing is I have bookmarking systems for all these websites where basically in a click, I can quickly pop open every single one of these accounts that I'm looking at. In my case, it's going to be Wells Fargo, Capital One, PayPal, and Stripe. You know, and so I have it all in one place where I can just click, get logged into all of them. LastPass is a lifesaver, right? Because it helped me get logged in nice and quick. So my point being, this process actually doesn't necessarily take me much more than 5 minutes on any given day. Sometimes I'll spend a little bit more time because if I'm close to getting to a point of wanting to transfer money in here, then I want to just analyze things a little more closely. So maybe I'll spend 10 to 15 minutes at the most just trying to decide if this is a good and safe time. And the one thing I want to stress again, and I said it earlier, is I want to be careful before I do make this, as exciting as it can be. I want to make sure I'm not leaving myself strapped to the point where I'll have to take money back. Again, that has to be like the first rule. Right? The first rule of this process is I never want to have to take money back out of the savings and put it into the operating, right? If it comes to that and you do it, don't beat yourself up, do it, but just make it a hard and fast rule that should be the exception and not the rule, right? So far, since I started doing this process, I've never had to move money that way because again, I've been very careful about when I actually made the movement that I want to make, which once again is from, you know, from the operating to the savings account. So that's basically it. Like I said, it's not rocket science. It's pretty simple, straightforward stuff. But happy to open things up for discussion. I would love to hear from others about what they've done that works well. So unmute.
So one thing that I learned is make a separate account for payroll, and then you build that reserve in there. So that way each month I move next month's payroll in there, so I'm always ahead, which gives me that safety net, kind of like what you're saying there. So,
Yeah, I like that idea of, and I've had a lot of clients over the years who do that, where they have the payroll account and they actually just transfer enough money to cover the payroll every pay period. Jessica says my system is almost the same, but your spreadsheet is prettier. And she pays her credit cards off twice a month. I see Tina's comment saying that she likes the idea of paying it off weekly. I do, because it keeps the balance very sort of digestible, right? In any given week, I don't rack up more than maybe a couple $1,000s on the credit card, and I just pay it off. And looking at it in the analysis that I just went through, it makes it very clear to me, because my net cash position reflects the payoff of whatever that balance is, right? Because it's in there, it's being deducted. So once that's all in place and I still have plenty of cash, you know, in the operating funds, then I know I can very easily make that payment without having to sweat it, because it's already factored in. I'm just looking at some of the other comments. Tina says I need to dive more into ClickUp and Airtable, because Greg says he's got a recurring task to remind him to pay it off every Monday. Yeah, and that's the best way to do it, I think, is just have a process. Like for me, it's Sunday. Sunday is usually my day to catch up on my own accounting stuff, right? And so that's just part of my Sunday process each week, is I pay off their credit cards and I pay whatever bills I know I need to pay over the next week, because I know I'm going to do it again next Sunday. So that's fine.
So Seth, how often, I thought earlier on you said you do this every day, that you look at your accounts. How often do you actually update that spreadsheet?
The spreadsheet I update just about daily, sometimes every other day. What I'm saying that I do weekly is paying the credit card balances down.
Yeah, I got that.
Yeah. Yeah, this I
And I
update.
might have missed this because I did come in a couple minutes late, but if you can quickly, like, how did you come up with that amount that you want to keep in your operating account?
By analyzing this consistently over a period of time, honestly. So it was a bit organic, but I just, by doing this process for a while, I eventually got to just sort of mentally establish what the range needed to be. I kind of just figured out, like, okay, I know from experience now that as long as I have this amount of money at a minimum in the account, I'm covered. As long as I maintain that, right? Which means obviously I've got to have inflows to cover the outflows to keep that balance there. But as long as I maintain my balance at about, a certain amount, I know that my bills are all covered. And I said I use the term easily, right? And that's important
Right.
to me. It needs to not be a stretch. I need to know that. And like I used the example. I said, let's say that range I figured out is between 20 and 30,000. It's not actually random. That's what I initially figured out it needed to be, and that can change, right? Because your needs change over time. You grow, you do more things, right? So just because you figured out that right now the range is between 20 and 30 doesn't mean that that's not going to increase at some point, right? But the point is you'll be acutely aware, first of all, of when it does increase. But again, to answer your question, Suchi, it was really kind of an organic process of just looking at it every day. And a
Okay.
little bit of sort of studying my own reaction, like, because I would start to notice, and that was really the whole key to this for me is, again, I can run a balance sheet, but it doesn't force the same reaction as going through a process like this that's much more intentional and focused, because I would start to notice my own reaction when I would start getting sort of stressed out and the idea is not to get me stressed out to the point where I can't function, but rather to get me stressed out just enough to get me motivated and say, okay, I need to start getting creative. And actually becomes kind of a fun process, because if I see my if I see my cash balance going down, and I see that there's a direct relationship, of course, between that and the net 30-day sales number, and if that's going down, then I need to hustle. I need to do something, right? What can I do to bring sales in? And what it also, what this whole thing underscores for me, that I think a lot of us miss as accountants and bookkeepers, and we all get kind of stuck in this, so don't like beat yourself up about it. It's perfectly normal. You're not alone. But we get stuck in the trenches of our practices because we just want to do it because we don't trust anybody else to do it as well as we can. But the true fact of the matter is, as the person who's running the business, it's your job to bring in the business. So we really need to think more and more about hiring the help we need to do the work so that we can focus on what our job needs to be, which is, again, as the business owner, is bringing in the business, making it rain. That's what the business owner's job it is to do, until or unless you hire a sales team to take care of that part for you. In other words, if you're not doing it and you haven't hired somebody to do it, you need to ask yourself, who's doing it, right? Or am I just waiting for clients to fall into my lap, which I know a lot of us actually do that. We just wait for the referrals to come in and whatever. And that's not a growth plan. That's not a strategy. That's luck, right? Maybe somebody's excited today and happens to have a conversation with somebody else and says, yeah, I've got this great bookkeeper, Suchi. She's amazing. You got to give her a call. I don't want to wait for that to happen. I want to be more proactive and intentional about it. And the only way I can do that is by having a process in place that, helps me get really clear on where my numbers need to be. And, it doesn't require all the fancy ratio analysis and other things that we do. I mean, don't get me wrong, that stuff can be helpful when used properly like any other tool. But I think this is a much better starting point for a lot of us because it's simple. And yet, like I said, it's powerful because it really gives us the perspective that we need. Where do I need to be? How much do I need to be okay? And what's my, what direction am I heading in? If I see that the net 30-day sales number is dipping, I know that it's just going to be a timing function of when that affects my cash balance, right? So that's, again, I didn't talk about the net 30-day sales number as much this morning because I wanted to focus on the cash position primarily, but rest assured there's a direct relationship between the two and they're both really important. So when I start people off in Bulletproof CFO, one of the things I work on with them, and we have a different template for the net 30-day sales number that we use. Here, as you can see, we're just updating it. We're not keeping track of the history. If I want to get the history, I can go into QuickBooks and get that. The net sales 30-day number, there's actually a template where we actually do key and track each day's money that came in. I'm so sorry. I don't know what's going on with my throat today. But in that template, we key the number every day for what came in that day behind sales. Obviously, if it wasn't money coming in from sales, it doesn't get included. And we have that laid out for 30 days so that we calculate that average number. For me, Kajabi does that for me, so I don't need that. But for somebody who's not using a sales tool like Kajabi, we we key the numbers to get that average number going, and then every day we kind of remove the oldest number and move everything back and put in the newest number, right? But again, it's that process of actually taking the time to do it that forces us to pay attention to it and keeps our focus on it. And just like with the cash balance, I start to get a sense of what range that number needs to be in. And I'll tell you something, it is really nice when you start to notice that because you've focused on it, these numbers start to break through the upper ends of their range. It is such a good feeling. It gives you such a sense of peace and security, because you just know that it's going to be easy now to take care of things that at other times may have been a struggle. I know I've been through that stuff. I'm guessing each and every one of you at one time or another, if not right now, has had those struggles. So Angela's asking, is the Capital One personal or business? Is that an issue? So truthfully, the Capital One account that I transfer money to is a personal savings money market account. It's not on my company balance sheet. It's just in this analysis because that's what I want to manage, right? Remember, this template is not designed to be an accounting tool for your business. It's designed to be a cash flow management tool. So I'm not worried about sort of commingling personal and business related accounts. It's more about just managing the flow of money. So of course, when I move that money from the operating account to the savings, it's going to get recorded as a distribution that I've taken out.
Yeah, and I use Ally Bank actually. It's just online accounts. It's also personal account, but I also have my business, what I did determine to be my business savings account at that account, but it's really a personal account as well.
Right.
And I see Joshua's asking also, oh, sorry, that's Stuart. What happens when your cash balance is much lower? Is it the same procedure? So I just wanted to butt in for 1 second.
Please.
I don't do this oversight thing that you did where you have a quick summary, which is great. But I do in Smartsheet actually have a weekly cash flow sheet that I do, which is very detailed. So the kind of the same concept, but just having like line by line, like you mentioned, like all the deposits in transit, just kind of laid out by the day of the month. Like I charge certain clients on a certain day recurringly. So I have like the 15th, the amount, and I can kind of play with that every week. I kind of put my bank balance at the top and put the detail in, and if payroll's coming out that week, I have that amount there. So you can kind of play with it in a more detailed way sometimes. And I find this with my clients as well. The ones that have a harder time with cash flow, the more detailed you get into it, they start getting more of a sense, and then you can kind of manage it better. And then you can kind of zoom out more and more as you start planning better because you have a better feel for it.
Right.
Does that make sense?
Yeah, no, 100%. In fact, I'm glad you said all that, because you reminded me of another template. I used to actually sell this template, and I just never brought it over into the new site, but it really kind of speaks specifically to what you described. So I'll share it with you in a second, but also my 2 cents on Stuart's question is, when your cash balance is much lower, it's still the same procedure, but your thresholds may be different, number one. Number two, obviously you really want to focus on just getting the clients in. I have so many conversations every week with people who reach out to me because they're starting out as bookkeeping and accounting professionals, and they kind of want to know what's the first thing I should do. And my answer is just about always the same, which is the first thing I'll do is ask them, how many clients do you have right now? And a lot of them will say, well, 0. Again, I'm just starting. And I say, great, your full-time job is getting that first client. Until you have that first client and have the money coming in, that's what you need to focus on, because that's the only way you're going to have cash flow to manage, right? So I know Stuart may not be in that position exactly, but what I'm saying is if your balances are much lower and you want to set those thresholds and reach them, it may be a while before you can start effectively transferring money into a savings. So your entire focus should be on bringing in the business so that you can generate that cash flow so that you can start moving money into the savings account, right? So we just prioritize a little differently based on, wherever we're at in the sort of cycle of our business. And then Suchi, what you just reminded me of was what I had created years ago, because I didn't understand at one point why my cash flow would get so tight at certain times of the month, even though it seemed like I was making plenty of money, or should have been. And so I created this template. I no longer use this, but I called it a cash flow map because in my case, a lot of the money that I make comes in the form of subscriptions, right? Even my accounting clients, they don't pay, I don't bill them hourly. They pay a monthly subscription and that money just rolls in based on whenever they signed up with me. So what I did to start to analyze why there would be times when I would feel like things were getting really tight is I created this cash flow map. And once again, I lost the chat here somewhere and I see it going off. I'll come back to that in a minute. So as you can see, what I did was I laid this out based on 1 through 31, right? The days of the month. And I could plot out. I know that client one's money comes in right on the first. Training clients, I expect this month I'm getting, this one's going to sign up for this and so on. So I literally laid out in a map-like format exactly what was coming in and on what day, right? Because of the cycles, sometimes it might be off by a day. But then at the bottom, what I would do, and then of course I had all my outflows, right? Auto payments, payroll that comes out and so on, rent, suppliers, whatever it is, I would, my actual one was much more detailed. It actually listed it by payee, exactly what came out. And I have a lot of auto pays, so I know exactly what day that money comes out. And over here, it analyzes my daily cash flow. And what I did was I wrote a fairly sophisticated formula here so that each day over here, I would key in and say, here's what my balance is, right? But notice it doesn't change in these days based on the cash flow because the formula that I wrote here on the balance analyzes the date. And it basically says if the date is prior to today, then don't consider it because I want to take the balance as of today and only factor in cash flows on or after today. So I wrote a pretty sophisticated conditional formula. You can kind of see it up here. That does that quick analysis for me and says, okay, so today is lit up, conditional formatting right there. So assuming I just keyed this in, we're starting with 2,000, nothing happening today or tomorrow, cash flow wise. Sunday, it looks like I've got 850 coming out in an auto payment and boom. So it deducts that because there's also nothing factored in as far as inflows, right? And so this took a lot of time and work to build, but once it was built, it was pretty quick and easy to maintain. And what it did for me, one of the most significant takeaways for me that came out of doing this, and I was so glad I did, was I noticed that for whatever reason, and I can't tell you the exact reason why, it really didn't matter. It only mattered that I noticed the pattern, was that for me, a lot of money came in between the 1st and the 5th of the month. And then it was fairly slow from the 6th to about the 12th or 13th or 14th. And then starting on the 15th till the end of the month, I had a lot of other, money coming in. So that's what I realized is that's where I was starting to get tight because during this point in the month, I had very little money coming in and I still had money going out, right? Oftentimes a payroll would hit right at the end of this sort of dry period of the month for me. And so I got the answer to my question that I needed. And so, of course, what I did then was I started to realize, all right, well, I have to be careful with the money that comes in the beginning of the month and keep it, right? Hold on to it to make sure that I'm covered. And I actually used this process for a good couple of years until I really got my cash flow turned around. And then this kind of eventually evolved into this process that I shared with you today, which I'll continue to do. I don't know that I'll ever stop doing this process. Josh says subscriptions are the best. And also, Suchi, you mentioned Ally Bank, and I love that. One of the reasons I chose Capital One, besides the fact that they have a number of products that I love that kind of go hand in hand with, using them for banking, is they don't have a lot of branches. They started opening up these Capital One cafes, which are really cool. Before COVID happened, they started opening up a lot of those. So there are some locations you can go to, but none that are like down the street from me. In other words, the point being, I want to put that money somewhere where it's not going to be as easy to get to as going into my bank account where my operating funds are and I can make a quick transfer online, or I can just go down the street to the ATM and pull cash out, right? It's a little harder. It makes me stop and think more before I do something like that. Reality is, I could go in right now and schedule a transfer. I have it linked between Capital One and my main bank account. In 2 seconds, I could go make that transfer. And even then, though, it takes a few days before the transfer completes because it's between two different banks, right? So again, we want to put that degree or several degrees of separation as much as we can between where the savings money is parked and where our operating funds live, so that if we, we just want to kind of force ourselves to think about things before we do them. We want to purposely make it so that it's not easy. So Stuart says, is that worksheet part of 97 and up? Yes, pretty much in 97 and up. Any templates I've ever created are yours. Yeah, I've pretty much made that guarantee to people.
Can I do a shout out?
Yeah.
So I don't know if you know, we're doing a webinar, and if you pay for the webinar, which is S Corp's Everything You Need to Know, you get a free month of 97 and up.
Yeah, you have to pay attention in checkout, but it'll offer you the upsell for a free month trial of 97 and up if you sign up for the webinar. And when you do, if you do choose that option, you'll pay the $197 for the webinar. 97 and up, starting a month later, will be $147 a month, assuming you decide to stick with it. So you'll get I've been giving out that coupon code forever anyway, so you'll get that discount. You won't need a coupon code. It'll just happen. So if anybody wants to check that out, that's available. All right, let's check the Facebook feed here and see. I haven't been looking at the comments. Diane Muller comments saying, knowing your burn rate. Yep. You have to know how long will the money last if you don't have any money coming in, right? So that's in venture capital, they refer to that as the burn rate because, you're dealing with like startups that don't have any revenue. They're living off of the venture capital funds that they've brought in. And so they need to see how long is that going to last. I've gotten to work on some pretty interesting projects along those lines where they said, okay, we just got, whatever it is, 5 million in venture capital. And I've built financial models that allow them to look at like 3 different scenarios. Usually we just refer to them as conservative, moderate, and aggressive. And you can do the math and figure out conservative means the slowest rate at which we spend the money, moderate and aggressive, and we look at, what drives those things? What are their major expenses? Again, usually it's going to be payroll, labor, development, paying software developers to develop whatever it is that they're creating. And seeing if we hire more developers to get it done faster, we may get it done faster, but we'll burn through the money faster. And you're trying to find that balance of, what the burn rate is based on, can we get the work done in that time realistically? So you can get, as accountants and bookkeepers, you can get some interesting projects when you start to really sort of learn how to focus on this kind of stuff and how to build these sort of projections and forecasts. And that's why I started Bulletproof CFO this year, is because I just realized that there's too much out there telling you that you need to do it, but not enough telling you how to do it. And so I built that program around showing people how to do it from A to Z, from getting the clients to actually providing the services. And I will say that we got to see Josh's webinar in 97 and up on everything you need to know about S Corps, and it's awesome. Lots packed with really good information, along with several templates, including, is an accountable plan calculator. I think that's what it was.
Yeah, it's a tracker. So you input all your different expenses, and then it will calculate the journal entry or reimbursement check. I actually just updated it, and I made a new version that's better. So you can do it monthly or quarterly. So
got it. Cool. Yep. So all that, when you check out, you immediately get an email autoresponder with links to download, all those documents. And then of course you'll have the live webinar, and then of course you'll have the recording to go back to afterwards. So great stuff. I hope to see a lot of you there. And it's free for
next week, right? The 11th?
It's September 11th. Yeah. So it'll be after this webinar on next Friday.
Not immediately after.
Not immediately after. Yeah. It's, what did we say? 12 o'clock or something? It's
12 Pacific.
Yeah. So that's my story, and I'm sticking to it. What are we looking at next week in terms of our webinar? Hold on. I can tell you. And I'm still here, and a bunch of us still here if anybody still has any questions. So next week, we're actually going to look at Zapier, and I want to show you some. So again, I'm trying to keep things simple these days because I just think there's a lot out there that overcomplicates things, and I think there's power in simplicity. So I'm going to show you some simple zaps that I use, you know, that get triggered pretty much daily for me, that that make my life easy. And so I want to show you all. I'm just going to go through a series of these zaps that I've created in Zapier that make my life easy, and I'll show you how they're built so that you can start thinking about that. It's just, again, anytime you find yourself doing something repetitive in your business involving different apps, you probably want to think about Zapier and how you can just automate it. Because if it can be automated, it should be automated, because you shouldn't be spending your time on that kind of stuff, right? So we're going to show you that. And then the following week, September 18th, I'm going to show you a process I've been developing just recently around a concept that I referred to as your personal operating system. And I'll explain, of course, in more detail as we get closer exactly what I mean by that. And that is our hour this morning. So again, you all know where to find me if you need me. If you have any questions, reach out to me. We'd love to see some of you in 97 and up. And already do see a lot of you in 97 and up. It's just a great place where we get to hang out and share valuable information and amazing just partnerships and friendships. And it's a great little family that we've developed. And I don't even take the credit for it. I feel lucky to have had the people in there, you know, who have joined. It's, you know, like I say, it's not about me. It just happens to be around me. And I will see you all soon.
S Corp webinar. Find us on social.
Yes.
Thank you.
Bye.
See you. Bye-bye.